Hello, Grow users. This is Ashish Naik. I'm work in Axis Mutual Fund. Um, in terms of experience, I have been with Axis since 2009, since the firm started. Um, Started working in various analyst roles in terms of coverage of various sectors. In 2016, I started looking at managing funds across the multi-asset portfolio or the hybrid portfolios that Axis has in terms of Axis Triple Advantage, Axis Children's Gift Fund, Axis Regular Saver Fund. And then I started managing the equity hybrid fund when the NFO came about 2 years back. So now, from there on, now we are looking for launching another new fund, the Axis Special Situations Fund, which I would also be managing. Um, just to speak about this fund, the Axis Special Situations Fund is an open-ended thematic fund, which will look to target the power of disruptive growth. So how do we define these special situations, and link it to disruptions? Uh, we believe that there has been a massive shift in the business environment globally over the last few years. Traditional businesses are actually seeing significant competition from new entrants with new innovative business models, technologies, products, and they are backed by private equity funding that are actually upending the way business has been done in the past. Key positive of this is that investors have significant alpha generation potential, especially from a long-term investor perspective, which can benefit from such disruptions. Over the long term, innovation and technology have created disruption in businesses across sectors, and this disruptive growth is the primary medium for long-term price appreciation. Over the medium term, we believe there are other special situations such as sector dynamic shifts that may result in tailwind opportunities for some companies that may result in higher revenue and profit growth from a medium term perspective. In the short term, there are a few event based elements like mergers and acquisitions or business restructuring that can also drive a stock re-rating. So, from all these perspectives, the Special Situations Fund may be uniquely positioned to target various growth opportunities from long to medium to short term perspective. But as we mentioned, disruption is going to be the core of this fund. At least 70% of the fund corpus would be invested in the disruption theme. So let's understand it in a bit detail. We characterize the disruption into four buckets of companies, such as disruptors, enablers, adapters, as well as deniers. Disruptors are the frontline companies whose products and services are at the forefront of disruption in a particular sector or industry. The examples here could be the likes of Amazon or Tesla, or maybe if you look at China, the likes of Alibaba, Tencent. Such companies are relatively smaller in terms of numbers, but they have the highest alpha generation potential, given that they are the ones who are innovating and disrupting various industries. We can find such companies across the world, including India, and across market caps, starting from large caps to mid caps to small caps. But what is also important is look beyond the surface of, let's say, a theoretical iceberg, and look below that, and you will start finding many companies such as enablers, which are actually second in line to disruptors, who make this innovation possible through research and development and technical know-how. These companies are seldom in the limelight and are relatively unknown. When the market identifies these companies, there is a significant re-rating as the true potential is unleashed. An example here could be for a Tesla car, which is an electric vehicle. We need various components such as battery chemicals, which are made by companies such as Samsung, SDI, LG, Chem, and Panasonic. And also the electronics or semiconductors that go into such cars are also made by companies such as Texas Instruments. Now, these are relatively unknown names, relatively lesser in terms of valuations, or let's say upside to be captured here can be better if one is able to identify them earlier. There are a third group of companies called as adapters, who are basically the incumbent companies who stay relevant by reorganizing or reshaping the way they do business to stay ahead of the disruption in their industry. Such companies are typically disruptors in their own right and constantly innovate to stay ahead of the curve over sustained periods of time and grow market share or are market leaders themselves. Example of adapters in the electric car value chain could be a company like Volvo. which has been innovating in the past and has decided in the next 5 years they will move out of the old technology cars such as diesel and gasoline vehicles and only look at pure battery vehicles or pure hybrid vehicles. Clearly shows that they have been able to change their business model such that in the future, if various countries discontinue or do not allow selling of old vehicles, old technology vehicles, a company like Volvo has already adapted to these changes. Um, One thing is important from a disruption perspective is to avoid the deniers, who are the companies that are getting disrupted and not able to change or do not accept the change. Such companies could be, any company in the auto industry, which today is not only producing components for the gasoline or diesel vehicles, or let's say engines. These companies could be potential future laggards and hence might not be able to grow in the future or maybe cease to exist. So overall, just to summarize, the fund will also participate, as we mentioned earlier, in event-based as well as dynamic sector dynamic shifts, as and when these opportunities present themselves. In addition to this, about 30% of the fund would be invested into global stories, where we will try to capture opportunities across the globe, where our well-known, globally acknowledged partner in the name of Schroders would be advising us. They have an existing strategy of global disruption team, which they have been running successfully for the last 2 years, and they would be advising about 20 to 30 stocks, which we would be directly investing in. So the NFO of this fund starts from 4th December 2020 and goes on till 18th December 2020. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.